Hey, looks like I did not hit the go button. So here we are. Um, let's see if we can do this again. I thought we were live, and it appears we were not live. That's exciting. All right. Well, shall we start again? We shall start again. Let's stop sharing my screen here real quick. I wanted to discuss the today. I wanted to discuss the transition of going from being a discretionary price action trader to a systematic discretionary price action trader, um, and really what that looks like, and how to navigate, what to expect, and how to navigate that transition, and why someone might want to do that. So for me, I went from finding Al in about 2017 to uh, going through all the videos, and then stopping to focus on price action and transition to trading TPOs, and just found that they had no resolution, and that I couldn't get a good grasp of what was the how the day was developing and what the price action really meant. And so eventually I came back and reworked everything and read all the books again, and decided to streamline and just go with trading high twos and low twos. And that was great. It simplified everything. But, and I've been thinking about the, the analogy that best compares to the process of looking at basically the full chart, the full day, and the experience of the systematic trader who's only looking at things through the lens of the system that they've developed. And the best thing, at least right now that I'm thinking of, is in like the adventure movies, typically the worst ones, where someone finds a transparent parchment that needs to get overlaid on top of the map, which shows all the things, that places that could be, and then focuses that effort and the image into the thing, right, that needs to be pursued. And so for me, that transparent overlay, that is the system. That's what focuses your effort and allows you to act confidently and consistently, and comfortably. And I think that might actually be, in the end, what makes the most difference in terms of confidence as well. So what I'd like to do is share my screen and talk about how the process of really understanding a system helps. I mean, and Brad and I have talked about this before with calibrating expectations, but also managing managing emotions to a certain degree, but really helping the trader remain within their comfort zone. I mean, there's always going to be some amount of emotionality to taking a position and managing a position, but it should never push us beyond our comfort zone, because at that point, we begin to risk, as I titled the stream, we risk getting into trouble as soon as we start getting emotional about or excessively emotional about our positions. So I want to share my screen and discuss how the experience of trading a system differs from the experience of trading just a chart. So this is a chart of the system I'm currently trading, and signals it generates on top of the modified breakout code. So based on Ali's breakout code with some modifications that I've done some research on, and which I use to determine the signals that I trade. So one of the things, and I encourage anyone to ask questions and jump into the comment section. We'll put the questions up in the on the screen so everyone can see them. The thing that perhaps helps me most during the day is knowing I'm going to have plenty of signals to trade. I don't need to worry about being in every trade, and I don't need to worry about trying to necessarily chase the market to be in everything. I can enter at my leisure. I can manage trades according to my expectations, and when the market thwarts those expectations, then I have a method which I understand for getting out of that position, and in some cases, reversing, which is less common. So, for example, today, before I stepped away right about here, when the market transitioned, so I missed all of the sell-off into the close, which is perfectly fine. As Ali and many others have said, if you're relying on these kinds of moves to generate your system performance, it's probably not a lasting system. No system is going to generate all of its returns if you're hoping for moves like this day in and day out, right? It's being able to safely navigate this kind of environment that really has a meaningful result in the over the longer term. So for me, knowing that I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I had 10 signals before I stepped away right about here. So got the transition below the EMA, and I actually left at 145. So when this doji closed, I was heading out the door, and I didn't trade. I didn't get into. I didn't buy this on a pullback. I knew that or I thought that the opening gap would likely close, and it did on bar 3. But when I tried to enter here on bar 3 on a pullback, I didn't get filled. I didn't chase the market here. I did get filled on bar 10. I'm sorry, on bar 9, 50% pullback on bar 8, and then got out at the bar 8 high. I did not take this long. My system research shows that these late trend bar breakouts in leg 3s, and so this is the start of leg 3, have a very low probability of getting follow through. And so the trade I did end up taking as I sold above 15 and took profit. Well, I didn't take. I waited for the close here. I thought that this was going to actually test below. It didn't test below, so I just got out here because I also know that it is uncommon for the trades to perform after 3 bars. So it eventually got to the target after 5, but I almost never hold a position for 5 bars. So I was out after 3, and then bought below 22 because this is a trading range buy below signal, and it's an outside bar. So and outside bar in a trading range, and likely to get that pullback. So bought there and was out. I think let me see. Think I exited at on bar 29 at the low of 23. So from here to there, and then bought below 31 on 37 and was out back at the 37 high. This fade signal I took and sold above, and then sold again at the 50% measured move of this signal bar, and took profits at the low of right below here. So I usually place limit order exits and one tick above the level that I believe will be tested. So I make sure that it gets filled. So I was out right here, the low of 45, anticipating that we were going to test the low of um, this bar after after this bar was created, and I had originally had my take profit here below this doji inside bar, and I moved it up to one tick above here after this buying, and then I didn't take another trade. So knowing that I had plenty of options to trade, I didn't have to take them all in order for the system to perform, and that I could reasonably manage all of them with the understanding how the system should perform. Like for example, knowing that my research shows after 3 bars, you're typically not going to reach your target within the next one, within the next bar. So better not to suffer drawdown, and better to be out. So that was reason for exiting there. Um, this was a buy below in a trading range, and after all of these, this difficulty to resume the move up, I got out here anticipating more resistance at the 50% of this trading range, the developing trading range. So a lot about the price action still informs the management, but the nice thing about having that reliable system, that transparent map that you can overlay on top of all of the bars that we would otherwise be looking at, and really having to spend a lot more time and energy trying to disentangle from the context, and attribute the meaning to in real time. It just allows me to sit back and really focus almost entirely on management and trade selection. Because as the signals generate, I can decide how I want to enter, and if it doesn't get filled, I can let the trade go by, knowing that within the next 4 to 5 bars, I'll probably get another signal. So Justin says, "Thank you for this." Well, thank you for being here. Thank you for jumping in. DJ, what are the best filters besides leg 3? It really depends on the system that you're developing, because if you think about it from a first principles perspective, you want to determine one of two things. Right? Is the market more likely to continue in the direction it has been? Is the momentum going to continue? Or do we have a higher probability of beginning some kind of mean reversion? And so you can use the same filters for both, but they have different meanings, right? So leg 3 is typically a good mean reversion indicator that you should start thinking about, or looking for signs the market is going to begin some kind of pullback process. How much of a reversion you get is entirely dependent on context. But there's a lot of things that you can look at. I put together an indicator to just show how many different things you might be able to research. I mean, you can look at the amount of excess that a move generates, breakout above the highest high. So sorry, breakout above the highest high. You mean for the last 3 bars, and low overlap to prior bar. So you mean the amount of overlap of the current bar with the previous bar, and how much higher the breakout goes compared to the last 3 bars? Yeah, I mean, the overlap is a significant filter. Do you know why overlap is significant, or do you have any ideas? Anyone, feel free to jump in on that. Strength of breakout, yes. I mean, you could have a strong breakout though, that doesn't have a lot of that has a lot of overlap. And the bar is, let me see, it's a good example. Let me see a good example of that. Okay, so here, this is a strong close that has mostly overlapping. Um, And one of the qualities that the 50% overlap actually shows, so it's a strong breakout, but it didn't go far enough to start a new market cycle on a lower time frame. And so, what the amount of overlap really defines is how much is where you are in the market cycle on a lower time frame. So, if you're trading bar by bar and looking to scalp, then what the amount of overlap shows you is whether you're in a channel or you're in a spike in a breakout. So here, this is breakout phase, and then this is your first sideways. So now we're beginning into channel, and then here you have another strong breakout with weak follow through. So continuing the channel phase, but now leg two, strong breakout, very little overlap. This is a measured from the high of this bar because these two are inside bars. But the breakout is a strong breakout in leg three, so different meaning than it is in leg one or than it is here. So it's because it shows the strength of breakout, but the strength of the breakout tells you something about the market cycle, and that tells you how to calibrate expectations. And so all of these come back to the way that the system helps you stay really out of trouble. So let me, Ian. Yeah, this is these are all Hal's. This is all just price action. There's nothing here that is not something that Hal talks about in one of his books. So yeah, this is all just coding for price action. If you have any follow up questions, feel free to ask. So why did I scale into bar 39 trade? Because let me show you. So if this had gone against me, so it's a matter of once you have bars in your favor versus bars that continue against you. So here, I did not have a full position. I was willing to scale in if I got uh, weak breakouts against me up to 50% of this, a 50% measured move of bar 15. So I would have scaled in up to there, but 48.25. But it went in my favor relatively quickly after this strong move or quick move down, uh, and then the gap up on the next bar. So you can see that this was a gap up open. I closed as soon as that one gapped up. So here was different, right? Here we didn't have any move in my favor. Well, so I entered here on 41, and the next bar was a weak breakout bar. So these are at least, and you have to validate this through research and forward testing in order to feel comfortable doing it. But then selling the 50% extension of that measured move, or a 50% extension of the measured move here. Just figuring out how to articulate that and whether I had those terms reversed. But yes, so selling there is the first scaling in location. You can technically scale in a full measured move, but given the strong bull environment, the only way this trade remains logical is if we don't get a strong breakout that gets followed through above this trading range that was developing here. So that's the difference. Is this one went immediately in my favor. This one went against me. So this one has more tolerance for scaling in, and as long as I don't get any consecutive strong closes against me or a signal in the opposite direction, I would add there, and I would consider adding it at one measured move, but not in the current conditions. Uh, uh, yeah. So do this. Yeah, Brad and I are both coaches in Systems Academy, and so we're both doing the same thing. We're deploying price action based systems for the discretionary systematic price action trader. So it's really just using the principles of price action from a first principles approach to, uh, I mean, it limits, I say limit, but to allow traders to operate confidently and safely, consistently across the whatever setup and systems they develop. And so in this case, I don't know if you've seen any other videos where I talked about the system. It's based entirely upon whether the algorithm that it uses sees each bar as a trading range or a trend bar. And I mean, this is straight out of Al's books. You're either in a trend or a trading range, and if you're in a trading range, there's certain expectations for how you should behave, and if you're in a trend, then very different expectations. And so this just identifies that on the level of the bar, because for me, I prefer not to hold trades for more than a couple of bars, and this allows me to uh, operate in the market without a lot of exposure to time risk, while still maximizing the number of R I can walk away with. So I don't know if that answers your question. I'm happy to expand on anything in particular, but probably a good place to start. Justin, you said, do you use varied size? Yeah, sizing is one of the very important modules in system design, and it comes much later in the program, because you have to really understand the nuances of your system before you can develop a scaled position sizing uh, uh, module for your system. But for me, I typically trade like if I know that it's a trade like fading above the highs in a trading range that can often lead to a scale in, then I'll typically use a quarter to at most half, typically a quarter of my full position size here, and then add up to a half, and then I'll usually don't take more than a half a position size on fades, and will scale into a full position size on trend resumption trades. So I hope that makes sense. But yes, and then it also changes based on volatility. So like I have let me see here. This will show. Yeah. So this shows the average bar size and some info about the session. So if bars are very small, if there's not a lot of volatility, I'll use scaled position sizing versus if we have obviously there's much larger bars here, you can't use the same position size. So there are a number of things that will go into determining positions and how to scale and whether or not to scale. And then you can also see here understanding. So in Systems Academy, one of the things, obviously you have to do research for your system design, but one of the things that also helps a lot with, and actually DJ just said all my losses are due to misreading of context. Better understanding context is typically the fastest way to better understanding context is through doing market studies. So going in and saying, picking something, I'm going to learn the most that I can about the middle session. So after the opening range, through the early afternoon. So you can argue it's basically until 1. So you're 10:30 to 1, and then you have your some people will say 10:30 to 2. If you go to 2, obviously you're going to be way out here. But this is the point in the day where you have a much higher probability of seeing trading range behavior. I would say today we did, but I spent a lot of time doing market studies on the opening range and the implications that has for the developing day structure and expectations uh, for the close. And actually, this identifier you see up here, the bear trending trading range day, is the algorithm that I use for day type. Um, you can see where is it for the day before. So this was a bull trending trading range day. This is just a trending trading range day. This is just a trading range day, bear trending trading range day. And so these were all determined by an algorithm that I wrote after doing research on the opening range. So this is to say that one of the things that also helps systematic traders a lot is doing market studies. So really understanding some aspect of the market, whether it's a time of day, um, whether it's volatility. There's so many different things that you could study. The number of reversals and how much they reverse, within the opening range. And these are all things that it would be worthwhile to study, especially if you're going to like trade a system that trades before bar six. Knowing how often you reverse any opening drive, like that's a really useful piece of information to know if you're going to be trading in those conditions. So let me here. This is both Al and Ali note that context is the most important factor. Um, Coding for context is quite difficult, so you're not alone. EMA slope is useful, but it's not going to give you context. You need to it. You can use it as a surrogate for trend lines and as a kind of a preliminary filter for regime. So above bull regime, below bear regime. So more bull things will work in a bull regime. Fewer bear things will work in a bull regime, and vice versa. But you definitely need to perhaps broaden the lens through which you're thinking about context and look at some of the larger structures. Just think about the larger patterns that can develop across the day. Obviously we had three legs on the open trading range, major trend reversal or lower high major trend reversal, and then sell off, which got a measured move of this entire upper range. So if that's how the day developed, then how could you reasonably code for that? Like what are the variables that you would need to use as inputs in order to get something meaningful from this? So typically when I'm thinking about context and code, I kind of reverse engineer everything so that it comes back to some first principle, um, the that the market is expressing at all times, and how I can distill all of these individual expressions that mark kind of different periods in the day, and see it through that. And I'd say if you aren't accounting for it yet, looking at time helps a lot. Um, So X says is a robot trading. No, I don't use a automated trading. I do all of the execution and management. In the So this is just one of the systems. This is the system I'm currently trading, and everyone trades a different system. So the nice thing about Systems Academy and the way that we work with traders is that everything is entirely individual. Nothing is really some of the principles are certainly transferable, but because everything is really particular to the trader who's managing it, we talk about a lot of different things on the channel, and so you can go back and look at some of the videos Brad and I have done. We edited a lot of the PTM videos, the Pro Trader Mentoring videos that we've been in with Ali for over a year now, and so there's a ton of stuff on the channel. But honestly, I would just go through and start with it's categorized into different types of videos. So you'll have coding for price action. You'll have system development, trader psychology, or there's a lot of different things that we have on there. And yeah, take a look at the contents, see what you like, and then feel free to post a comment on this video. I mean, I'll check the video afterwards, and if you leave a comment, and I'll drop some feedback there too. And you'll certainly you can jump in to the next stream, which will probably won't be that long from today. All right, Satmat, from watching all your videos. Just so I understand correctly, when you take a limit trade on the pullback, do you strictly enter on the distance and not waiting for a good signal bar? Exactly, yes. With limit order trading is taking the opposite trade that someone trading a stop entry on a signal bar would be using. So for example, the signal bar for this system here is generated here on 8, right? This is a trend bar, and that means that if it's a trend bar, it needs to be a what I'm anticipating, and because it's in leg 3, or it's sorry, at the end of leg 2, and likely getting a transition. So this is the previous day high. So it's a breakout of the previous day high, likely to come back and retest that. There's a lot of context here that suggests we're going to get sideways price action. So I entered at 50% of this bar, which was actually there, just above the. Make that a little bit bigger. So it actually ended up correlating exactly with the high of 7. So yeah, limit order traders are fading the current move, and so they are always. So if you think of it this way, limit order traders are always taking the opposite trade of stop entry traders, because their limit orders are always going to be where the stop order trader is entering. Does that make sense? Well, I'll put that back up and just reiterate that, yes, if you're trading with limit orders, you are not waiting for signal bars. You are anticipating the you're anticipating the continuation of the market condition from the previous bar. So you're either trading for trend resumption or continuation of trading range behavior. So when I get a trading range signal, I'm fading it, and when I get a trend signal, I'm trading for continuation. And then there are certain calibrated expectations that you can deploy as a result of understanding the system, which you then use to manage the position. You're welcome, Ian. Good to have you joining us, and yeah, feel free to drop those comments into the video after it posts, and we'll be happy to jump in there and answer any questions, especially once you get into some of the other videos. You can see how Ali teaches in PTM and kind of get a sense for what's going on over at Systems Academy and Quant Systems more generally. So I think I'm going to leave it there for this evening. I'm going to try to do more of these and keep them a bit tighter than some of the other ones that we've done, which have drifted into the hour range. But I think that it's a bit more manageable if we do 30-minute sessions and get some good engagement and answer as many questions as we can. And actually, I'll answer this question really quick before we wrap. I do use a lower time frame for entries. Sometimes I use a 100-second chart, but one of the things that my code does is it basically it anticipates what's happening on the lower time frame by looking at the current bars as whether they're in a trend or a trading range, because it's using the relationship between the two bars to determine whether it's a higher probability of being in a if it's a trading range here, then it is a trading range on a lower time frame. If this is a trend bar, then this is a spike on a lower time frame. If this is now an outside bar with a sell above, then this is a trading range on a lower time frame. This is big up. This is two legs down, right? So that was a this is like your textbook second leg trap on a lower time frame. So this is Al's second leg trap here. And then in one move, we come back up to the top, sell above there, pull back, second leg trap at the top. So this is basically two second leg traps back to back on a lower time frame. So if you go in and look at your 100-second chart, your 1-minute chart, that's probably what you're going to see right here. So I do use the lower time frame, but without necessarily looking at it all the time. That's a good question. All right, well, that's actually a good place to leave it, and I'll be hopefully within the next day or two doing another live stream. Sorry, just thinking out loud and where we can get another one in. Let me stop sharing here. But yeah, thank you for everyone for joining and asking your questions, and it's great to see what you all are thinking about and where you are in your either transition from fully discretionary to systematic, or in your thinking about systematic trading. But nonetheless, if you have any questions about the difference between them, how to begin that transition and what it looks like over the longer period, feel free to drop any questions, as Ian will be in the comments below, and we'll get to you soon. But have a great evening.